are you rethinking at all your call that a recession seems likely later this year? I mean, obviously, we know what the leading indicators have been saying, but based on what the market itself seems to be hinting at, is it giving you any pause on that front?
Well, of course, as our friend Helene Meisler says, price has an amazing way of changing sentiment, right? But no is the answer. So I think you stole my thunder when you opened up, Mike. You appropriately pointed out, we're just getting back to losses in late December. Like before coming on, I looked at the high yield market, the S&P 500, the 10-year note yield are all around where they were at that December peak. And if you look at the relative performance of the industrials, the financials, and the energy space, where there's so much interest going into the year, they're all back to the relative performance level they were early November, believe it or not. And actually, energy is at the exact same relative performance to the S&P it was in late June at that peak. So it's a really confused market, just like you and me and everybody else is. At what point do you transition from bad news is good news to bad news is bad news? And ultimately, it would be historically unique for the yield curves to act the way they are, the leading economic indicators to be where they are, the ISM, the real liquidity, money supply in Europe and the U.S. is still kind of in free fall. So it's one of those times where I'm going to stick with the fundamental data because even with the market data is so compelling.
Sure. And of course, as all those things point in a similar direction, what they don't exactly tell you is the timing and how long the lead times might be. We just never quite know how that's going to work. But I wonder, in terms of the Fed decision tomorrow, in terms of the message that Jay Powell offers, is there anything that you think can bend the economic trajectory much one way or the other, or do you feel like it's pretty much well baked now?
I think it's pretty well baked in. And what's interesting to me is in tech right now, you're getting layoffs are the new bull signal, which is kind of unique. But when I look at what Jay Powell, so here's the problem that investors have, and it says I'm as confused as everybody else. But here's what the man said: we don't want to replay the early 70s, which means taking the foot off the throat of inflation or the market too early creates longer term and more entrenched inflation down the road. He's also said that they're not going to do anything this year in terms of cutting rates. So at this point, they're having a tough time with credibility. And the market is telling them what they're going to do. He may push back a little bit on that. And, again, the market is a little bit overbought. Could that put pressure on it? It could. Ultimately, nobody knows how high the market can go on this momentum run. What I do know is, again, it would be historically unique to not go into some degree of recession. The UPS CEO today said the base case is a mild recession. That's the guy shipping the goods. So if you go into a recession, you've never bottomed the S&P before you even entered it. It doesn't mean you have to go down 15 or 20%, Mike, as we've talked about before on the show. You're not new in the bear market. It's a year and a half old for the average stock. So to me, this expectation of a recession isn't, oh my God, run for the hills, we're going to zero. I want to attack the next move to the low, because to me, that's when the bad news will become the bad news. The margin compression will be evident in earnings, and you'll be able to have a Fed that will allow us to look through the coming slowdown into the recovery. So
that implies that you would still need a relatively stiff decline in this market. I mean, we're now 500 S&P points, well more than 10% above the lows from October. So that would be some kind of a scare that something worse was likely going on. And that's what it would require, do you think, to get aggressive in terms of buying?
Yeah, Mike, as you know, we were in the camp of the fourth quarter rally. We turned more defensive in the first week of December, when you had already run almost 14% higher off that October low. We're back to those levels in all those areas that I had mentioned earlier. Okay, so the market is confused. It didn't know if it should have stayed down. Now it's rallying back to that level. And what do you do from here? And that all comes down to what is going to happen with margins.